Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? I'm going to take the financial advisor hat off for a minute and actually expand on some stuff that we're going to be including in our research membership site for those of you that can't be customers of Jazz Wealth or just like managing your own investments. jazzwealth.com/research. You could actually check it out. If you want to leave your email, we'll let you know when it's available. We won't spam you or anything. We'll just, if it's available and you're interested, we'll let you know. But you can check it out there, see what we're going to offer. And I will share some of this with you today. What I want to talk about today is really those of you that are learning the stock market, staying at home, trading, doing your own thing. I know you're out there. I see the emails. I also see a lot of frustration. And a lot of people think, hey, I have to win really big in order to be a successful trader. I also have to win a lot in order to be a successful trader. And I want to prove that to be false today. I'll actually show you a few different examples of how you can actually be really, really crappy at investing or trading and still be quite successful. I'm going to use a PowerPoint. Hope you don't mind. We'll just kind of, maybe you'll deal with me through this. I don't normally do this, but let's go. Oh yeah, there we go. It worked. So what we're going to talk about is the level of accuracy. How good or bad can you be? Because in the beginning, you're going to suck, right? Just be honest with you. You're not going to get a lot of them right, but it doesn't mean you can't make a profit or break even while you learn. A lot of people think you got to win big. I'm going to disprove that here as well. So let's just dive into it. First thing that we want to track is your level of accuracy. We'll give it a fancy name. We'll just call it batting average, right? Batting average. How accurate are you? How many winners do you have versus how many losers do you have? That's really it. That's all we're looking for there. And so, for example, if you're making like a spreadsheet or something, which I'll show you a really geeky one here in just a minute, number of winning trades divided by the total number of trades that you have. So real simply, if you have 10 total trades, you've got 5 winners, you are batting at a 50% average. Which is just average, right? You're not doing great, you're not doing poorly. And however, it doesn't tell us enough. We don't know whether you're making a profit or not. So I see a lot of these traders out there that are like, oh man, I win like on every trade. Okay, I need to know more information, right? If you win out of 4 out of 7 trades, you're 57% accurate. It doesn't sound all that impressive, but I can show you how that person could actually be wildly successful in terms of the number of dollars that they're putting into their pocket. The way that we do that is we add one more data point. So first, your batting average. How accurate are you? Number 2, your win-loss ratio. When you do win, how much do you win versus how much do you lose? You're going to lose. We all know it's going to happen. So we want to know how much you win versus how much you lose. If you're losing $100 every time you win 25, you're going backwards, right? You understand how that doesn't work out there. So what we're doing is we're tracking the average size of your winners divided by the average size of your losses if you're going to make a spreadsheet. And again, I'll share that with you here, real geeky here in just a moment there. So for example, if someone has an average win of $100, an average loss of $50, their win-loss ratio is 2. Is that trader profitable? We don't know, right? There's no way to actually answer that question. You would think, oh yeah, that's a profitable trader. However, if they lose more than they win, technically they could be losing money there, right? So if there's a trader, like in this example, averages a win of $100, loses 25, win-loss ratio would be 4, right? Now you know how that works. Is that trader profitable? We don't know. There's no way to know. We have to assign the batting average to it as well. And you have to track this. If you're not tracking this and you're just kind of winging it and buying and selling stuff, promise you, you're losing in the long run. It's going to happen. It's just the way it's going to work. All right, so let's take an example here. We've got a trader, $100 that they win versus their $25 loss, and they have a batting average of 40%. They win 4 out of 10 times. Is that trader profitable? Now we've actually got something we can work with. We've got something where I can say, good job, or you need to do some actual work. If you break it down in sort of our little rough PowerPoint that we have here, 4 out of 10 trades are winners. They make $100 per trade. 6 out of 10 trades are losers. They lose $25. That boils down to a $400 total profit minus a $150 total loss. We could say, yeah, this trader is profitable. They're making money by only getting 40% of their trades right. They're not even at average there. So the next question I would want to ask is, this is not great, right? They're making money, but they'd like to be more accurate. What happens if they hit a rough patch? What happens if they are not accurate for some string of time? How much could they afford to lose, or how bad in terms of accuracy could they be before they start losing money? Well, let's work it out. If they had a 30% batting average, meaning they only got 3 out of 10 right, some of you can relate. This happens when in the beginning there, you're winning 300, you're losing 175. Total means that you're making a profit there, right? You got a profit. If you go down to 20%, that's actually your break even. Meaning, if your win-loss ratio is high, you can lose a lot more. If your win-loss ratio is low, which I'll show in a second, then you better be winning a whole lot more, right? So when we talk about like where to sell a stock position, it really has nothing to do with where the stock is at. It has to do with what's your risk and everything, and we'll cover that on Friday for you as well. Now, let's take a different example. What if you're the type of trader that says, I don't like to shoot for big wins. I like to kind of get in and get out, do my day trading sort of thing, or whatever you're doing out there. Let's talk about a scalper. That would be what a day trader, scalper, someone that's just in and out. It depends on what name you want to give it, no problem. Average win-loss ratio is a 1, meaning they lose just as much as they win. Well, you can already kind of see they've got to be better than 50%, right? If they're less than 50% and they're winning the same amount that they're losing, we already know that they're a losing trader. This person has to be more accurate. In the very beginning, if you're learning how to trade, do not go down this road. Try to shoot for bigger winners until you become more accurate. Then you can go ahead and start being more of a scalper. So question is this trader profitable here? If their batting average was 20%, you already know. No, there's no chance. It's impossible. There's no way they make any profit because they win 200 to lose 800, total loss of $600. It's just not going to work out. There's just no way that has to happen. What if they had a 40% batting average? Well, I already gave it away. They have to be over 50% in order to be better. So in this case, they would win 400 to lose 600. Doesn't work out. Math doesn't go in their favor. You'd prefer to get all of your trades right. It's not going to happen, but you'd prefer to get them all right. Your margin of error in terms of accuracy is much smaller. You made it harder on yourself by trying to win just as much as you tried to lose. It's not the stock market's fault that you're losing money. It's what you did to your batting average and your win-loss ratio. Batting average is not controllable. Win-loss ratio is, of course. All right, we'll wrap it up with a quick quiz here. Tell me, out of these two traders, who is more profitable? Trader number 1, batting average 40%. Okay, well, we know that's not bad if they have a higher win-loss ratio. They do. It's a 3. All right, so maybe not bad there. We don't need to know any numbers. We could just assign any number you want to it in terms of dollars per trade. Trader number 2, batting average 80%, win-loss ratio 1. Yeah. All right. Well, that seems like that guy's killing it, right? So let's do it. Let's break it down here for the beginners out there real quick. Trader number 1, if they risked $100 per trade, they would win 300 4 of 10 times, and they would lose 100 6 times. $1,200 profit, $600 loss. The net result is $600 profit after 10 trades on average. Of course, this is just an average. Trader number 2. They risk $100. Same thing. We'll put them up against each other. Wins $100 8 times, loses $100 2 times, $800 in profits, $200 in losses. I tricked you. They're the same, right? Both of these traders are actually profiting the same amount, assuming their risk is the same. If someone's betting more, of course, it's different. But in terms of profitability, if they both went on their merry way and we gave them exact same amount of money, trader number 1 would make and return the same amount of money as trader number 2. The only difference is trader number 1 is not as accurate, but they're able to gain a little bit more when they do win. It's like fishing, right? Maybe you don't catch the most amount of fish, but when you catch the one that you're kind of hunting for, everybody else is reeling up a bunch of fish and they're tiny and they're fun to catch and everything. But when you land on the one, you're feeding the whole family, right? That kind of thing. So in other words, you don't have to be accurate. Totally prove the whole thing wrong there for you. You do not have to be accurate. You do not have to win big in order to profit. You do have to track your trades, however, and all of our customers, I've given this to them if they want. We've done a really detailed class for them in the dojo. But here's a stats tracker. It's really, really geeky. There's a whole lot going on here. There's more below the screen. It can't seem to pop up at the moment. But this, all in all, after you plug things in that you're interested in, your trades and everything, tells you how much money you made, tells you your batting average and your win-loss ratio. Currently, this when we did this class, I was trying to show that this trader was improving from being pretty poor at trading and their win-loss ratio was going up. It's not great, but with their batting average of 66.6%, win-loss ratio not even 1, they've got a tiny profit. They're very close to break even, but this was meant to illustrate a trader that is improving slowly along the way. Hey, anyways, I hope you'll check us out at jazzwealth.com. We are long-term investors, right? Our portfolios are on our website. We're just super geeky about how we manage portfolios. The performance, you could check it out as well. If you can't participate with us because you're out of the country, you want to manage your own long-term retirement investments, Roth IRAs, things like that, you can go to jazzwealth.com/research. And depending on when you're watching this, it's either up and available for you to sign up for, or if you go to the bottom, you can leave your email address. We'll let you know when it becomes available. We will not spam you or anything like that, I promise. And that's all I have for you. I'll wish you a good rest of your day. Join us later on the closing beat if you'd like. And yeah, adios.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.